Amazon's Q4 2025 earnings, strong sales, missed profit expectations, and a bold $200 billion bet on AI. Amazon.com Inc. reported its fourth quarter financial results for the period ending December 31, 2025, on February 5, 2026, delivering a mix of solid performance and forward-looking ambitions that rattled investors. The company's latest earnings report showed notable growth in revenue and cloud computing but also highlighted challenges ahead as Amazon ramps up spending on AI and infrastructure. Sales growth beat expectations. In the fourth quarter, Amazon achieved net sales of $213.4 billion, a 14% increase compared with the same period in 2024. This result exceeded Wall Street's revenue estimate and reflected continued strength in the company's core e-commerce and services segments. North America sales climbed 10% to $127.1 billion. International sales increased 17% to $50.7 billion. The cloud division Amazon Web Services (AWS) posted a strong 24% year-over-year increase in revenue to $35.6 billion, marking its fastest growth in over a year. AWS continues to be a pivotal driver of Amazon's profitability, even as competition from Microsoft and Google intensifies. Profit miss and share price reaction. Although Amazon grew both revenue and net income, it missed analysts' earnings per share expectations. The company reported net income of $21.2 billion, or $1.95 per diluted share, slightly below forecasts of $1.97 per share. Amazon stock dropped sharply, as much as 8% to 10% in after-hours trading, as investors reacted to the earnings miss and forward guidance. Bold capital expenditure plan for 2026. One of the most striking elements of Amazon's earnings report was its outlook on future spending. The company announced plans to invest an unprecedented $200 billion in capital expenditures in 2026, far exceeding Wall Street expectations of roughly $146 billion. This investment is aimed at expanding infrastructure across artificial intelligence, robotics, custom chips, and low Earth orbit satellites, areas Amazon sees as essential for long-term growth. However, this aggressive capex guidance raised concerns among investors about short-term profitability and cash flow, contributing significantly to the steep decline in Amazon's share price after the earnings release. Strategic shifts and workforce reductions. Alongside its spending plan, Amazon continues to streamline operations. Since late 2025, the company has cut more than 30,000 jobs, part of a broader effort to eliminate underperforming businesses and boost efficiency. Retail closures, including many Amazon Fresh and Go stores, have reshaped the company's physical footprint while directing focus toward high-growth digital segments. Looking ahead, guidance and market expectations. For the first quarter of 2026, Amazon forecasted revenue between $173.5 billion and $178.5 billion, roughly in line with analysts' expectations. Operating profit is expected to be weaker than consensus forecasts, another factor that weighed on investor sentiment. Despite short-term volatility, many analysts emphasize Amazon's strategic investments, particularly in AI and AWS, as critical to its long-term competitive positioning. The cloud division's performance, together with growth in high-margin advertising and subscription services, underscores the company's diversified revenue model.